Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, January 26th, right after the markets close. Well, the U.S. stock market's strong start to the year faces a major test in the upcoming week. This week is going to be packed with big tech earnings, the Federal Reserve's monetary policy meeting, and the closely watched unemployment or employment report. The S&P 500 is up nearly 3% since the end of December and stands at record highs, driven in part by expectations of a U.S. economic soft landing in which growth remains stable while inflation cools. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And this index, we call it our benchmark because it conveys, if simply put, the mood and manner of the top 500 stocks in the stock market by market capitalization. You kind of want to know, if you're a trader especially, where the benchmark, what mood and manner it's in, to kind of get a feeling for where stocks might go. Now, the SPY, the SPY, closed at $487.41 today. It touched a new all-time intraday high today at $489.12. So we're right up at all-time highs here. Now, we know if we look back a little ways to October, back here, we know that it fell on higher interest rates for quite some time, and then as interest rates started to melt lower, which of course can usually push stocks higher, the October low came in here at $409.21. That in the end of October, as interest rates started to melt a little lower, buyers came into the market, and with that and with short covering, the bulls have enjoyed ever since a very, very orderly, and we'll call it an enthusiastic uptrend. So from those lows, it climbed up over the 200-day moving average. Now the 20-day, the red line, the 50-day, the green line, at that time were inverted, with the 20-day being lower than the 50-day, but the SPY kept moving right up here, moved over these highs, the October highs. That was a good thing. Then finally gapped up here to the 446 level. That was in November, so it was just shot right up here. Finally came up trading at a premium back here in November, quite a premium in November, to the 20-day moving average, again the red line. Then quickly continued to climb in a really beautiful uptrend, again using the 20-day moving average as a trend line. It started to falter a little bit in January. It fell through the 20-day moving average, but just for a couple of closes, a couple of days. But then we've got earnings season in here, and the SPY popped right back up again over the 20-day moving average. Again, a teeny tiny little dip here around 470. Then did a real nice run up here to where we are now at $487.41. So we are up quite a bit. They're saying we're up 3% from December, but we're up off the lows quite a bit more than that in this particular rally. Now, what we can see here, yes, this is good news. Yes, we're in an uptrend. And if we want to get real about it, we are trading here. The SPY is trading again at a premium to its 20-day moving average, with the RSI here now over the 70 line. I think it's like 71.25 or something. That means in the short term it's overbought. That's a 14-day RSI. So yes, we're in a good mood. We're in a good uptrend. This coming week is going to be exciting, to say the least. Just be careful here. One good approach is, and I taught this for years and it's always been true, trade what you see, not what you think will happen. Okay? Because in this coming week, nobody knows what's going to happen. And hopefully it stays good and it stays positive and the SPY stays above the 20-day moving average. However, there's a little room here for a rest stop, as I like to say. So again, trade what you see, not what you think will happen. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This ETF represents the top non-financial companies by market capitalization in the NASDAQ 100. This is where all of the big high momentum stocks are especially powerful, and we have stocks like Apple and Google and Meta, Nvidia, Microsoft, that whole group. Now the Qs were all at all-time highs here. The Qs made an all-time closing high this Thursday at $425.83. Now today it closed near those highs at $423.81. So we look here and we know that the Qs have nearby price support here down here at 414. There's price support. Then we have the 200-day moving average coming in at 411. Then we have more potential price support down here at the 50-day moving average and so forth. Now, as we can see, the Qs have also used its 20-day moving average, the red line, since it rallied in October out of its lows. Down here, the Qs came down to $342. Then, like the SPY, it quickly jumped when interest rates started falling. Tech stocks are especially touched by interest rates. They need lower interest rates. So when interest rates started falling a bit, the Qs started rising pretty dramatically here, climbed over the 20-day moving average, over the 50-day moving average, and then shot up over October high resistance. Here's the October highs. That was at 373, so it shot over that. Then the Qs went over September highs, which were back here. It shot up over those, jumped up and gapped up on November 14th to open at $383.71. Finally, it had to take a breath here, and it consolidated in a range about 383 to 394, then got its breath and got going again, moved up again at a premium to the 20-day, dipped in the first week in January, just briefly, just for a few days, down to 395, then rallied to where we are now, back up and over the 20-day. Again, we're at $423.81 at this moment. Now, the RSI, we can look down here, it's still overbought. It is softening a bit. It's still over the 70 line. As we mentioned earlier, we are in fourth quarter earnings season right now, and AMD and Google are two of the biggest momentum companies with a lot of power to push the market around. AMD and Google are announcing earnings, I should say Alphabet, excuse me, are announcing earnings after the bell on Monday. So that's going to be really exciting. Again, we also have, in the coming week, the Fed's policy meeting and interest rate decision. It's a very big deal right now, which way that goes, or what they even use as what we'll call guidance. All of these factors are going to have an impact on the market's direction in the coming week. So please fasten your seatbelt. I'm going to keep my protective stops in place. Okay, for our final chart here today, our third chart, we're going to look at a chart I don't think we've looked at in a very long time. This is a daily chart of the Invesco DB, which DB Energy Fund, symbol DBE. Now, please know that the DBE is not an ETF that holds stocks like most of those that we trade or look at. The DBE is a rules-based index fund based on the most heavily traded energy futures, including light sweet crude oil, what we call WTI or West Texas Intermediate, heating oil, Brent crude oil, and a couple more. Now, because the fund holds futures and not stocks, your profits are figured a bit differently than stock funds. It's actually a beneficial way that it's figured. Your accountant or CPA will know that. So, but if you want to keep it simple, just trade it in a non-taxable account like an IRA. I do like the chart pattern here. Now, the DBA closed today at $20.45. If we look back here, if we look left on the chart, you'll say, "Whoa, Toni." If you look back on the chart into May and June, you can see part of May here in June. You'll know that the DBE, I should say, fell to lows of 1850 and then a little bit higher at 1930 in May and June of 2023 back here. Then it rallied to highs up here in September of about $24. And we saw this rally was very steep. And you know that steep rallies, I love them. I love to trade them, but I don't believe in their long term. I know there's always going to be profit taking. That rule comes in. But anyway, it moved up dramatically, came up to about 24 and then came down to about 21.50 here. And you can say, "Oh my gosh, I wonder if a Head and Shoulders is forming." And I actually drew a neckline here. Well, a Head and Shoulders did form. Now, it did have a higher right shoulder, which is actually positive. And believe it or not, a lot of people don't know this, but Head and Shoulders can also be continuation patterns. Now, in this case, that was not the case. So we have the left shoulder, the head, which then when it comes back down here, that's when we go. Traders say, "Oh my gosh, I wonder if this is going to be a Head and Shoulders." And it did, and it was. And it made a measured move down of about $3.50, which is the measured move got over with when it came back down here to about $20 and change. So it actually stopped right here a little higher than the base that we looked at earlier, look left, in May and June. So this is good news. The buyers came in sooner. And so it fulfilled its measured move, as I just said, and then made kind of a nice base here above 19. Right in here, it made this nice base. Here we have it. Then it broke out this past week. And today, it closed at $20.45. It's broken above the 20-day moving average under that. See, we have this triangle here, and it broke above that. And today broke above the 50-day moving average and closed again at $20.45. Now, in the coming week, if the DBE can stay above 1975, I know that's tight. You can loosen it if you want to. But I'm keeping an eye on the 1975 level. If it can stay above that, I will add a small position to my trading portfolio, and I'm going to put my stop in pretty tight at $19.25 right down here. Now, if and when the DBE can climb above the 200-day moving average, and it might take it a little while, but that's all right with me. I would consider this as a longer-term hold. When and if it can climb above the 200-day moving average, trading right now at $21.12, I will add to my position, and of course, I will have a trailing stop. So you may want to keep an eye on the DBE in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. You can also learn how to swing trade successfully. That's a great strategy in a market like this. You can learn to trade the trend with profits. It'd be nice if our DBE would be a uptrend and we could keep it for a while. We have for novices and those who want to go over it, How to Read Charts, a great program. 3 winning setups, great for short-term traders. And as I always say, one of my favorites, Bottom Fish Like a Pro. So if you'd like to learn how to swing trade, trend trade, bottom fish, and more, go ahead and check out these timeless programs. They will show you how you can elevate your trading skill set and so you can increase your gains quickly and easily. Check out all of my online training courses by going to the link right here on my screen, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.